Netflix is spending billions of dollars on content this year. The company's CEO says it may not be enough. Lauren Simonetti with the details there as Netflix reports earnings today, right?
Yes, after the bell today, we hear from Netflix. Really quickly, expectations, 63 cents a share, revenue, $3.69 billion. That's a big deal because it's $1 billion more than a year ago. A lot of this money, to the tune of $8 billion, is going towards original content. Original content. That's on par with Disney. But the CEO, speaking at the TED Talks over the weekend, said $8 billion might not be enough for Netflix. So how much is too much? Here's the deal. At the end of the fourth quarter, when Netflix put out their earnings, this is what they said. We're growing faster than expected, which allows us to invest more in original content. So $8 billion and then some. Eventually, Apple, for instance, will catch up to a number like this, and Amazon. But right now, it's Netflix and Disney really spending big. It's a big number to wrap your mind around. But if they can grow their international, their global subscribers, maybe there's room for this.
Well, they've got to do something to compete, and they've been competing with the bigger networks and entertainment companies out there, and that's why everyone's afraid, because they don't care what they're going to spend on content, right?
And they're competing with everybody. Apple, Amazon, Fox, Verizon, Time Warner, Comcast, the list goes on. So, yeah, I guess they want to stay competitive. And it seems like, according to what Reed Hastings said over the weekend, that they really have their eyes on Disney right now. And that's a nice chart. Look at that, a one-year chart of the stock.
You know, somebody said to me recently, it's very difficult to compete with a company that doesn't care about how much they spend and how much money they may lose, right? Yeah. And that was the brilliance of Amazon. And that's why Amazon just kept taking market share by spending what they needed to spend, and they didn't care if they were losing money or weren't making enough money. Is that the same issue with Netflix?
I think no. Ultimately, no. Investors don't care about how much money you spend or even waste on bad content until they do care. And when you are going up against the likes of an Apple with the enormous cash hoard that company has, I think that eventually you run into problems. Have they come along with a show? We saw Stranger Things that really draws in new subscribers the way that, say, a House of Cards might have? And the answer is no. Of the list of 8 shows that the New York Times wrote about over the weekend, like, here are the eight shows that you need to be watching on Netflix. It's things like Wild Wild Country, which is a documentary series, a limited series about the Bhagwan Shree Rajneesh. So it's really good.
Comparing them to Disney, they need a Star Wars, is what we're saying. Netflix needs a Star Wars.
They had one in House of Cards.
Yeah.
They need the next House of Cards.
But I do think that there is something that they've created this niche in the market that people want to be able to binge watch content that's different than they're getting anybody else. And so I think that that's what they're focused on. And if they're going to have some misses along the way, I think that is a big part of their strategy and their differentiator.
No, but they're not different, though. They're not different than from Hulu. They're not different from Amazon Prime. They're not different from even YouTube.
They're not.
YouTube television, not ultimately, not at the end of the day. And a lot of this new content they've come out with is just not that good.
Wow.
It's not good enough for the amount of money that they're spending.
So let's watch if they can really grow their subscribers on an international basis in a meaningful way when they report tonight.
All right, we'll be watching that, Lauren. Thank you so much.
Sure.